The top 10 funds by cash holdings across major equity categories are on your screen. At present, about a third of allocation of Motilal Oswal Midcap Fund is cash, and for Motilal Oswal Flexicap Fund, about a quarter of the allocation is cash. Now, of the 257 funds across major equity categories, 22 currently hold more than 10% of their assets in cash. Now, as many as 100 funds have a cash allocation of 5% or more. But why should you even be bothered about your fund's cash allocation levels? Well, theoretically, if the fund holds a lot of cash, it will drag down its returns. But does this happen in reality? Should you worry if your fund's cash holding goes into double digits or even high single digits? Should you consider exiting a fund? Well, we'll try to answer these questions in this video by looking at the data. Hello and welcome to ET Money's YouTube channel. In this video, we'll analyze whether high cash allocations have been useful or harmful to funds. Now, this video's insights will help you optimize your portfolio and get more out of it. So watch it until the end. This video belongs to our playlist on fund trends. You can check it out to watch more such videos. As always, the link is in the description. But before we begin, a couple of things. First, when we say cash holdings, it isn't hard cash but debt instruments. Second, every fund will hold some cash to manage liquidity and redemptions. Okay, so let's start this video with the theoretical pros and cons of cash allocations. When it comes to cash allocations, or in mutual funds lingo cash calls, the industry is a divided house. There are fund managers who support taking cash calls and there are those who don't. Of course, as I just mentioned, most funds would have a cash allocation for managing liquidity and redemptions. So we're not considering that as a cash call. For our purpose, a cash call is an above average cash allocation. So what do the proponents of cash calls say? They highlight the fact that cash calls help them avoid pricey market conditions or overvaluation in deserving stocks. Cash calls also allow them to be ready with dry powder should the market suddenly drop. If the economic outlook is too uncertain, staying in cash may make sense. Even Warren Buffett is a big fan of cash calls. As of March 2025, Warren Buffett's Berkshire Hathaway, which is an insurance cum investment firm, has $348 billion in cash due to tariff uncertainties. Now, sometimes the size of the fund hinders its ability, and as a result, cash calls become a Hobson's choice. Of the 10 funds with the highest cash holdings, quite a few also have assets of upward of 10,000 crores. Now, what do opponents of taking cash calls say? Well, they say cash calls can result in an opportunity cost. If the market keeps going up for a prolonged period, the fund holding high cash can underperform. Another argument is cash calls violate investor expectations. If you're investing in an equity fund, you want your money to be invested in stocks. But by investing part of your corpus in debt, the fund manager is not fulfilling the investor's expectation. Now, as the argument goes, if the investor wanted part debt allocation, he would have invested in a hybrid fund. Thus, a high cash allocation in an equity fund can even unwittingly distort the investor's overall asset allocation. Now, to counter the overvaluation argument, opponents of cash call suggest that it's the fund manager's responsibility to find pockets of value rather than park the funds into debt. Alright, from this theoretical debate, it appears that both the proponents and opponents of cash calls have some really good arguments to their side. But let's see what the data suggests as far as their standpoints are concerned. But before that, since we are on the topic of cash and mutual funds, here is something useful. You can now get cash to enjoy your present while staying invested for your future with loans against mutual funds on the ET Money app. The interest rate is just 10.75% per annum and there are no fixed EMIs. Pay interest monthly and repay the principal amount whenever it is convenient for you. Plus, there is no need for CIBIL score. So go ahead, check your eligible limit on the ET Money app. And there is more. For the next 3 months, any withdrawal you do, you will get a special rate of 9.99% per annum. So do it now. Okay, let's move on. We will start by looking at the methodology of our comparison. Funds with high cash holdings can be divided into two segments. First, those that tend to have a higher cash on average than their peers. And second, those that tend to move in and out of cash, so their cash holdings can fluctuate highly. Now in this video, we'll examine both of these segments. We will compare the 5-year rolling returns of the top quartile or the top 25% of the funds across both these segments with the rolling returns of the bottom quartile or the bottom 25% of funds. Similarly, we will compare their volatility as measured by the standard deviation of their rolling returns. In addition to this, we will also compare their performance with that of their respective indices. We will do so for 5 major fund categories: large cap, mid cap, small cap, flexi cap, and large and mid cap. We will then analyze the aggregate picture to determine whether funds that hold cash have an edge over those that don't. Okay, let's begin with the first set of funds. Funds that hold more cash in their portfolio on average than their peers. But before that, let me request you to subscribe to this channel if you aren't already a subscriber. And don't forget to press the bell icon so you never miss a video from us. Let's consider the flexi-cap category of funds to illustrate all the steps in our comparison methodology. Then we will take a look at the summary picture of the rest of the categories. Since we will use 5-year rolling returns for comparison, it is essential that a fund has a relevant history. So, we've considered only those funds that have been in existence in January 2019. Doing so allowed us to consider funds with sufficient samples of 5-year returns post the reclassification in 2017. Now, in the FlexiCap category, from the current list of 39 funds, 23 funds qualified on this criteria. We then sorted this funds list in terms of their average cash holdings over the years. Now, from this sorted list, we picked the top 25% funds and the bottom 25% funds. This constituted our top and bottom quartiles. Now, for the FlexiCap category, the list is on your screen along with their average cash holdings. Let's now compare the average 5-year rolling returns and volatility of those returns of the top quartile of funds with those of the bottom quartile and also with those of the relevant index, which in this case is the Nifty 500 TRI. For volatility, we will use the metric called standard deviation. The higher the standard deviation, the greater the volatility. Now, at a median level with a return of 16.5%, the funds that have held more cash have slightly underperformed the funds that tend to be low on cash on average. However, these funds have proved to be much less volatile. Their median standard deviation stands at just 3.05 against the median standard deviation of 4.3 of low cash holders. Now, as compared to the Nifty 500 TRI, both these sets have underperformed. However, their volatility is also less than that of the no cash Nifty 500 TRI. So, as far as the performance of FlexiCap funds is concerned, high cash funds do demonstrate lower fluctuations but with a slightly lower returns profile. Okay, let's now take a look at what we found when we did the same exercise for large cap, mid cap, small cap and large and mid cap funds. In terms of returns, high cash holders have done better than both low cash holders and the index. They have lagged behind in the case of small caps, but even there, they are ahead of the index. Now, in terms of volatility, again, high cash holders have done better in most cases. They have slightly lagged behind the index in case of large caps. Overall, one can expect high cash funds to perform well while also controlling the volatility. And that's the best of both worlds. Okay, let's now see how funds with high cash fluctuations perform. The second set of funds are those that may not have high cash allocation on average in their portfolios, but they tend to get into and out of cash tactically. So, their cash holdings can show a high fluctuation. Now, do such funds do better than those whose cash holdings don't fluctuate as widely? To measure the fluctuation in cash holdings, we will use a metric called coefficient of variation. Coefficient of variation or CV tells us how much a metric fluctuates from its average level. It will help us assess how far the cash holdings in a fund tends to go from its average level in either direction. Now, CV is calculated by dividing the standard deviation by average. The higher the CV, the more fluctuations a fund shows in its cash holdings. For instance, consider Parag Parekh FlexiCap Fund, which has the highest average cash holding of 7.5% as we saw in the previous section. The standard deviation of its cash allocation is 3.89. That gives it a CV of 51%. Now contrast this with Quant FlexiCap Fund. Its average cash holdings are just 3.65%. However, the standard deviation of its cash holdings is much higher at 4.81. This gives it a CV of 132%. Now this suggests that while Quant FlexiCap holds less cash on average, it goes in and out of cash more steeply. So let's take a look at the funds which are in the top and bottom quartiles as far as their CVs are concerned. Now, as compared to the previous list of high and low cash holders, this list has some interesting changes. Some funds have remained where they were. These include Motilal Oswal Flexi Cap, Tata Flexi Cap, Aditya Birla Sun Life Flexi Cap, and UTI Flexi Cap. Then there are many new entrants such as Quant Flexi Cap, Edelweiss Flexi Cap, SBI Flexi Cap, and so on. And finally, one fund, Kotak Flexi Cap, has switched its segment. Okay, let's compare the performance of these two quartiles of funds with each other and with the Nifty 500 TRI. The median returns of tactical cash allocators are more than those of funds that don't show high cash fluctuations. They are also more than those of Nifty 500. However, in terms of volatility, tactical cash allocators are more volatile than both less tactical cash allocators and the Nifty 500. Okay, let's see if we find the same pattern across other fund categories too. As far as returns are concerned, funds that score high on cash fluctuations do well in two cases. They lag behind the case of large cap and mid cap funds, but in the case of mid cap funds, such funds are ahead of the funds with low cash fluctuations. Now, in terms of volatility, these funds are mostly more volatile than the index and the funds with low cash fluctuations. Overall, funds that exhibit high cash fluctuations can also be expected to be rewarding but at a higher volatility. Okay, let's summarize the key findings of this video in the concluding section. We began this video with a question whether you should worry about high cash allocation in your fund. In this video, we analyzed two forms of high cash allocation, at an average level and in terms of fluctuations. Funds with high cash allocations on average did better than the funds with low cash allocations. Funds with high cash fluctuations also did reasonably well, but at a significantly higher volatility. This higher volatility is likely due to overall tactical bent of those funds. So, cash levels don't seem to have much of an impact on fund performance over the long term. But what about short-term performance? Most funds with high cash holdings at present have underperformed their respective indices over a 3-month period. This suggests that funds with high cash holdings can very well underperform in the short term. So, if your fund is holding high cash and has underperformed in the last couple of months, the simplest thing you can do is wait. Now, this problem tends to autocorrect in the long term. But if you find short-term underperformance due to high cash levels unsettling, or if you would like your fund to stay invested most of the time, you can go for a fund that doesn't take cash calls. Alternatively, you can visit the ET Money app. Here you will find innovative ways to navigate any market phase without having to compromise on performance. And that's all I had for you today. I hope you found this video useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.